Earnings season is about a fifth of the way through. Let's check in and see what companies can tell us about the economy.
Okay, so let's talk earnings season. Here's the most important thing for you to know. We're in the belly of earnings season right now, and reports so far have been decent, but they haven't been great. Here's the scorecard. Here's what we're seeing so far. So as of right now, about 17% of the S&P 500 has reported. So we've got about 1/5 of results in. 73% of companies have reported a positive earnings surprise. That's okay, that's roughly in trend. 66% of companies have reported a positive revenue surprise. Remember, as we talked last week, revenue is one of those things that you can't control. So I like to use revenue surprises to tell me how the consumer and how the economy is doing. This is pretty strong here, so that's some good data. Earnings, however, are declining, and this is different than last week. If you remember, our expectation is we want earnings to bottom here in this quarter and then start to accelerate once again as we get into next year. So far, the earnings decline has been about 0.4% negative year over year. Our expectation, if you ask analysts, what we were hoping for, was a decline of 0.3%. So we're coming in right at expectation, but it is a little bit of a heartbreaker because last week was so strong. This week's coming in a little bit weaker. In terms of guidance and what companies are telling us about the future, 7 companies have given us negative guidance, 6 companies have given us positive guidance. That's roughly about what you want to see. You want to see a coin flip. Obviously, we'd prefer companies to be telling us positive things all the time, but in this bottoming sort of quarter, everything looks like it's coming in where it should be. So what I would say is, so far, earnings season is decent. It's not great. I was hoping for great. Implications. If the rest of the earnings season continues the way this first 1/5 has gone, earnings season is going to be as expected. So no great shakes one way or another. However, the other important piece of data to focus on is the economy's hanging tough here. And one of the things that I like about earnings season is companies will tell us what they're seeing. This is an interesting one from Visa on the earnings call. This is Ryan McInerney, CEO of Visa, and here's what he says about the environment. Turning now to our key assumptions, as we've said consistently, this is Visa talking. We are not economic forecasters, but at a macro level, we are assuming no recession in their outlook for the year forward. Now think about all the data that Visa has, all the transactions, who's spending what, where, how much, the demographic data, what parts of the country are strong, what parts are weak, what parts of the world are strong, what parts of the world are weak. And what are they saying? They're saying we're not seeing a slowdown, we're not seeing a recession. Not factoring in any impact from Reg 2 or student loan repayments, because as I mentioned before, we've yet to see any meaningful impact. Now, this is pretty important. One of the things that I was worried about as we get into the end of this year was student loan repayments and if that was going to be enough to knock out the consumer. I'll take it from Visa. Visa's got better data than I do. Visa's saying we're not seeing any meaningful impact. That's a positive for the economy, positive for the market. As the year progresses and we gather more information, we will continue to provide updates, but we're assuming that the trends we saw in quarter 4 are going to continue throughout the year. That's pretty good. I like using this, particularly Visa, because they have so much data and such good data. This sort of echoes what the banks told us last week as well. They said the economy is durable, resilient. The consumer seems to be strong. They're still spending. So as we get data like this helps shape our worldview and what we think for markets. So there potentially were some fears around student loan repayment. I'm not seeing those bear out in the data. Implications, no sign of recession, at least as of Q3 2023. And Visa looking forward says, hey, next year's going to be pretty good, pretty normal, but we'll see what the data tells us about that one. What does it all mean? So far, earnings season is matching expectation. The next 2 weeks are going to be critical. This is where more impactful companies start to report, and I'll be bringing you all the highlights from those as we go. And I think the most important thing, the market's been going down, so I've been fielding a lot of nervous investor calls. The economy continues to look resilient as of the third quarter. And I think going into the fourth quarter, remember, the economy has some momentum behind it, so I wouldn't expect that to change. There's your update for the midweek. We'll catch up on Friday where we'll take a look at markets and we'll take it a week at a time. See ya.